green things and everything. But
Warren Buffett's net worth is over $100 billion, but would you believe he lives a modest lifestyle? His wealth secret lies in simple but powerful investing principles. Today, I'm breaking down Warren Buffett's top tips so you can start building your own wealth, no matter your starting point. If you find this helpful, give the video a thumbs up and subscribe for more financial insights. Let's dive in. Tip number 1, invest in what you understand. Warren Buffett is famous for his circle of competence. It's a fancy way of saying stick to what you know. If you don't understand how a company makes money, don't invest in it. Think about it. If your friend started a business in a super complicated industry you'd never heard of, would you give them your hard-earned money? Probably not. The same goes for stocks. Why does this matter? Here's what Buffett says. Risk comes from not knowing what you're doing. If you buy a stock in a company you don't get, you're basically gambling, not investing. Here's how to put this tip into action. Start with your own life. What products do you use every day? What companies do you love and trust? Do you work in a specific industry? These are great places to start looking for investments. Do your homework. Even if a company seems familiar, dig deeper. Can you explain their business model to a friend? This builds your knowledge. Don't be afraid of boring. Often, the most reliable companies are in everyday sectors like food, utilities, or household products. Tip number 2, seek quality businesses with competitive advantages. Warren Buffett loves companies with a moat. Think of a castle. A moat keeps enemies out and protects what's inside. A business moat is something special that keeps competitors away and lets the company keep making money. Here are some examples of moats. Powerful brand. Think Coca-Cola or Apple. People love these brands so much they'll pay more than for generic products. Secret recipe or technology, companies like KFC or Google have things no one else can copy. Lowest costs. If a company like Walmart can always offer the lowest prices, it's hard for others to compete. Buffett says, a truly great business must have an enduring moat that protects excellent returns on invested capital. Why do moats matter to you as an investor? Survivability. Companies with moats are less likely to go bust in tough times. Growth potential. Moats let these companies raise prices and earn bigger profits over time. Peace of mind. It's easier to sleep soundly when you invest in businesses with built-in advantages. Tip number 3, think long-term, ignore short-term swings. The stock market goes up and down. That's a fact. News headlines can cause it to jump or crash in a day. But Warren Buffett doesn't sweat the daily drama. He focuses on the long game. Here's one of his most famous quotes. If you aren't willing to own a stock for 10 years, don't even think about owning it for 10 minutes. What does this mean for you? Zoom out. Don't get hooked on daily price changes. Focus on a company's overall quality and its potential to grow over years or even decades. Tune out the noise. Scary headlines and market predictions are designed to make you panic and sell. Don't fall for it. Patience pays. History shows that the stock market generally goes up over long periods. By staying invested, you ride the wave of growth. Think of it like planting a tree. You don't dig it up every week to see if the roots are growing. You water it, give it time, and trust it'll become strong over the years. Investing in good companies is the same. Tip number 4, buy at a margin of safety. Warren Buffett is the ultimate bargain hunter even when it comes to stocks. He famously says, price is what you pay, value is what you get. He wants to make sure he's always getting a good deal. Imagine a pair of shoes you really like cost $1.50. Then you find them on sale for $1.30. That's your margin of safety, buying something worth $1.50 for less than its full price. The same applies to stocks. The goal is to buy a share in a great company when its price is temporarily lower than what the company is truly worth. Here's why this is smart. Room for error. Even good companies have bad days. This approach gives you a buffer in case things don't go perfectly according to plan. Protection from losses. If you buy at the true value and the price dips, you've lost money. A margin of safety helps minimize that risk. Better upside. When a bargain stock returns to its proper price, you make a bigger profit than someone who bought it at full price. How do you find these deals? Market downturns. When the whole market drops, good companies can get unfairly cheap. Patience is key. Know a company's real value, then wait patiently for a dip in price. Think of a margin of safety as your investing insurance policy. It won't make you rich overnight, but it helps you build wealth steadily over time, just like Warren Buffett. Tip number 5, diversification is key, but don't overdo it. Imagine if all your savings were in one company's stock and that company suddenly went bankrupt. Ouch! Diversification is all about protecting yourself from that kind of disaster. Think of it like this. Instead of betting your whole paycheck on one horse in a race, you spread smaller bets across several horses. This way, even if one horse loses, you haven't lost everything. Warren Buffett believes in diversification, but with a twist. Here's what he says. Diversification is protection against ignorance. It makes little sense if you know what you're doing. Here's what he means. Smart spreading. Owning several stocks in industries you understand is sensible. This reduces risk without sacrificing potential returns. Don't go crazy. Owning tiny bits of 100 companies doesn't make you a genius investor. It just makes it harder to keep track and less likely you'll see big wins. Focus is powerful. If you truly understand a few excellent businesses, putting a larger portion of your money into those can pay off big time. Diversification is like a safety net, but remember, the strongest safety nets aren't made by spreading a few threads across a giant space. They're made with thicker ropes focused in the right areas. Tip number 6, the power of patience. Warren Buffett is famous for being patient. He doesn't try to get rich quick with fancy trades or by timing the market perfectly. He understands that building wealth takes time. He has a great quote about this. The stock market is a device for transferring money from the impatient to the patient. Think of it like this. Ignore the hype. The news is full of stories about stocks skyrocketing or plummeting. This makes people want to jump in and out of the market to catch the highs and avoid the lows. Slow and steady wins. Trying to perfectly time the market is nearly impossible. But over time, the overall market tends to go up. By being patient and staying invested, you benefit from the long-term growth trend. Compounding is your friend. When your investments earn returns, those returns then earn more returns. And on and on. This snowball effect needs time to work its magic. Patience might not sound exciting, but it's one of the most powerful ingredients in Warren Buffett's wealth-building recipe. Remember, good things come to those who wait and invest wisely. I hope this breakdown of Warren Buffett's investing philosophy has been both inspiring and practical. Remember, his success isn't about secret knowledge or fancy maneuvers. It's about smart choices, a long-term mindset, and the discipline to stick with a proven strategy. The biggest takeaway is this. Wealth building through investing is achievable for anyone willing to put in the effort. It's not about getting rich overnight, but about making your money work for you over years and decades. Think of investing like building fitness. You don't become an athlete in a single workout. It takes consistent effort, learning from mistakes, and celebrating small victories along the way. The same is true for investing. As always, if you found this video helpful, give it a big thumbs up and subscribe for more financial content. Let me know in the comments which of Buffett's tips you're going to put into practice first. Thanks for watching, and here's to your successful investing journey.